Hello, hello. Good morning, everyone. Good morning, Trade Pros. Good morning, YouTube. Sorry for the huge delay today. Just relocating yet again, but we're here. We're back. We got about 10 minutes until the market open, so I just want to run through this pretty quickly. It's a pretty heavy week, and I want to start it a little slower today, right? It is the first day of the week. It is Monday. We don't want to get super excited about just massive trade size and trade quantity in a single day, especially Monday when we have a huge week ahead with tech earnings. That's what I want to talk about. Tech earnings, massive tech earnings that are reporting their third quarter results this coming week. And we have Microsoft, Google or Alphabet, Meta, Apple, Amazon, and a lot more, right? We have ExxonMobil, we have other big tech names, we have MasterCard, we have a bunch of those credit card companies, and they're likely to define a lot of the investing decision and direction for many traders in this week to come. So I know a lot of people are waiting for that to kind of start opening up these positions, opening up these swings, and getting a little more of the data from the market as to where we want to go in the next leg, right? Which I think can be a little sweep to maybe the upside. So we're going to be taking a look at those FANG names that are now not called FANG because they've changed a bunch. And we're expecting to see some kind of earnings results that ideally outline the expected forward guidance, right? We're expecting to see, ideally they do, we're expecting to see how they do with the supply chain issues, how they've done with the ad stuff, and all of that. So we have over $14 trillion in market cap reporting this week. The bigger picture, we saw earnings from Snapchat last week already set a pretty somber tone, especially into the digital boom that happened throughout the last 2 years and the massive effect of the soaring inflation figures. So fearful about the coming recession, many big tech companies have also imposed hiring freezes, and though some of these heavyweights have diversified their businesses enough to shield them from any advertising slowdown. So a miss on estimates could still trigger a panic drop naturally, with outsized gains and losses becoming a trademark for this volatile market. So the bar was set pretty low into the earnings season. We see that there's a hope for easier beats because of the massive revisions to the downside, but the earnings releases we're now seeing have not been necessarily that great. So according to FactSet, the S&P 500 companies that have missed expectations this earnings season have fallen 4.7% on average, and in the 2 days before their report, through the 2 days after, they've had that drop in average compared to the 5-year of 2.2%. In other news, the main other thing that I do want to talk about, other than the earnings that are coming up to start off this week, is we had stocks in Hong Kong and Shanghai closed the Monday sessions down 6.4% and 2% respectively, amid a slew of concerns over the country's economic outlook and the economic growth naturally. So while third quarter GDP growth beat expectations at 3.9%, the figure was way below China's official full year target of 5.5%. That's the figure number right there that made things drop. It's the same thing as earnings. Regardless of the earnings beats, if they do beat on these big massive tech companies, it is the expectations from last year and the growth from last year that is going to be a massive heavyweight on what we see in these companies. So this is already its lowest goal in 3 decades, and a large-scale property crisis and strict zero COVID strategies have weighed on consumer spending, and there are additional economic fears as President Xi Jinping tightens a grip on power. So this is panic selling, said Dickie Wong, an executive director at the research at Kingston Securities. Quite obviously, investors are simply not confident about the future in the Chinese economy, as they aren't that confident in global economies for that matter. During China's 20th Party Congress, Xi was awarded a third 5-year term as leader of the ruling Communist Party, while let me see, where did I? While the new Politburo standing committee was stacked with allies, loyalists, and proteges, Xi also reaffirmed that his common prosperity drive by pledging to standardize wealth accumulation mechanisms and by promoting Chinese-style modernization. Meanwhile, the Communist Party's constitution was amended by with strengthening fighting spirit and ability while deterring separatists seeking independence in Taiwan. So that's pretty interesting as well. We'll see how that kind of pans out. We have GDP numbers coming out of the U.S. I believe prelims are this week, and we'll see how that shapes up. But the main focus is going to be earnings realistically. And with that being said, yes, earnings have been kind of interesting over the past bit here, but I am still looking for some upside in this general market, right? I do want to see how this market kind of holds out for some of the upside into the coming week. And obviously, earnings can affect that drastically, but I am still a little more bullish, even though we had a little drop after we hit a very crucial level. If you're a part of the community, right, 3807 to 3810 was a very crucial level on the S&P futures. We dropped into the bottom of the distribution block at 3740, 45 into that region while popping back up towards some of these highs, hitting 38 here pre-market again. So we can see a little push. I have an upside target of 38, 35, right? That's going to be a huge, huge area, just as the 3807 to 10. If the sellers do come into that region, it's not going to be unexpected. That is the top of a distribution block. If we manage to buy, stop, and just run through that low volume area above 38, 36, my target is going to be 38, 85, and we'll probably see some selling into that point. But I think there is some bullishness to come out, and then we'll see how these earnings kind of affect that. So that's pretty much what I wanted to cover here now that we have 6 minutes coming into this market's open. I'm sorry for the delay. We were a little late this morning, naturally. I didn't want that to be the case, but ran into a few difficulties. So I hope you guys still enjoyed this video, and we'll be back into the remainder of the week to see how these earnings kind of play out. So thank you all. Let's open up these rooms, and I'll see you guys in there.